Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. The spot Bitcoin ETF effect is where we'll start today. Bitcoin is heading for its fifth straight monthly gain after the approval of a slew of products this January, as Invesco and Galaxy make a move in the battle over lower fees.
We'll speak to Tim Draper about this new wave of ETFs, plus get his latest call on where the price of Bitcoin goes from here.
Plus, we'll speak with Andy Bromberg, the Beam CEO, about crypto's global payments. So all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is an update for Bitcoin and some of the other major tokens out there, not necessarily consistent across the board, but certainly Bitcoin is moving higher today to the tune of about 0.7%. We're right around $43,500 and so dollars. Interestingly, though, that makes Bitcoin a relative underperformer compared to the likes of Ether or Solana today, each of them up by about 2.7%. However, the month of January is a pretty significant one for Bitcoin in that we have seen a 2% gain this month, not huge, but that makes it the fifth consecutive month in a row that we have seen prices moving upward. That is the longest streak we have seen since going back to the period of October of 2020 to March of 2021. Of course, that was in the bull market period. We were closer to $60,000 at that time. Now we're down closer to $40,000, but still a significant milestone. And of course, a lot of these gains over the last several months, Katie, came in anticipation of approval of the spot Bitcoin products, which of course we finally got this January.
We finally got there. And of course, amid all those moves in Bitcoin, let's take a look at how that's translating into flows when you take a look at global crypto funds. Of course, you did see that big run up, those rush into those global ETPs in anticipation of approval. And now we're looking at outflows. Again, this is the global landscape. Global funds lost about $500 million in outflows last week. And of course, we know that a lot of that is coming from the Grayscale Bitcoin Trust, GBTC. Of course, it does have a higher fee, 1.5%. That is much higher than its competitors. And also for a lot of the long-term investors in the product, this is one of the first opportunities they've had to redeem. That has meant 2.2 billion outflows from GBTC just last week and the week prior. Actually, you can see that initially we held up on that global landscape, but now we're looking at net outflows, of course, Kelly, as GBTC outflows continue to weigh on the overall picture.
All right, well, let's discuss that overall picture now, Katie, with Bitcoin advocate Tim Draper. He is founder of Draper Associates and the Draper Venture Network, which has helped fund names like Coinbase and Tesla and Robinhood. Mr. Draper, great to have you back on the program. I'd like to start, if we can, first with prices, because, of course, back in 2018, you said within 4 years, so by 2022, Bitcoin would be at 250,000. That obviously didn't happen in terms of that dollar figure. Now you've said it'll happen in 2025. So we have, 12 plus months to go here. Do you still stand by that call?
Yeah. Well, I don't know why anybody's still listening to me if I missed that one, but there was a moment in 2014 where Bitcoin was at about 180, and I said that it was going to be worth 10,000 in 3 years, and it hit it almost to the date. And so I thought I was magic. And so when I predicted 250,000, I clearly didn't get it right. I didn't get it right in the 4-year time horizon that I gave it. A few things I didn't expect. I didn't expect the U.S. government to be so paranoid about it. And I expected the U.S. government to figure out how to tax in it and figure out how to allow people to do business with Bitcoin as their base currency. And it's happened in a number of other countries. And that's why Bitcoin's doing so well, is other countries are recognizing how valuable it is to them. I know that people don't trust the Argentinian peso. Now they might, but or the Nigerian naira at all. And so people like to do business in Bitcoin in those countries. And so I think I miscalculated on how aggressive how scared the U.S. government was running. And now they realize that Bitcoin's actually better for everyone. It keeps perfect records. It, the people who they all thought were criminals using Bitcoin, turns out they were all caught. So using dollars is probably better for a criminal. And I think that there's going to be a moment where there's a run on the banks the way after the Civil War there was a run on Confederate money, and there was a run on the Greek drachma and a run on the French franc when they became a part of the euro. So I actually think that there will be a moment in time when I can buy my food, clothing, and shelter all in Bitcoin, and people won't want dollars anymore. And this,
well,
and then
and
it's
that
going
use
to
case that you're
so
describing, Tim,
250,000.
Well, the use case you're describing is actually it being used as currency, when a lot of people actually think the value comes from it being a store of value, from the idea that there's a finite supply. That's why there's been a lot of hype about the upcoming halving. Do you not think that that matters?
Oh, of course it matters. But of course it is a store of value, and that's a first step. And then I look at the stable coins as a bridge toward a Bitcoin economy. And I think that they're also going to be very important to the world for a while. And then when people realize that they want a currency that has a fixed number, and they want a currency that they can operate with without being subject to political forces, the swings of political forces changing the value of a coin.
Right.
I think it's going to be a really interesting 5 or 10 years ahead of us, where there is some time in that 5 to 10 years, there's going to be a time when you don't really want to hold dollars anymore, because you know that they're political and they're subject to inflation, and they're subject to whatever the central bank or the political forces decide to do.
Well, Tim,
when Trump spent $9 trillion, our dollars were suddenly worth about 75 cents. And people say, oh yeah, it's inflation. Well, it's because the government just decided to spend all that money. And so I think we've got a currency that now that we can trust throughout the world, and you can have Bitcoin. You can it's globally recognized. It's It can be used in many different ways, and it's more stable for anybody who's trying to run a business.
Well, let's talk about stable coins in your comments there. Is that a theme that you're investing along? You think about Tether, for example, Circle, potentially exploring an IPO. Is that something you're putting money behind?
No, I think that was a bridge to Bitcoin. I think I make investments in a lot of different companies in a lot of different fields, and I think that the investment themes I have now are these layer 2, layer 3 programs that are creating new systems for Bitcoin. I look at Bitcoin a lot the way I looked at Microsoft. Microsoft created a platform for everybody to use. And then people created all sorts of different software packages, WordPerfect, Lotus 1, 2, 3. They were all on this operating system. And then Microsoft saw that those were valuable, and they decided to create Word and Excel and other things so that the operating system was all dominated by Microsoft. Well, same thing's now happening with Bitcoin. There were a lot of experiments with a lot of other tokens out there, and the Bitcoin programmers are now saying, okay, we want DeFi, we want NFTs, which are now called ordinals. We want, so they choose a few really key applications, and they're all going on Bitcoin. So I think that's going to be the next generation. And that's where we're putting a lot of our crypto investment dollars.
Well, let's talk about somewhere else. You are putting your own personal dollars, Tim, because you have been putting money behind Nikki Haley, a Republican presidential candidate. I believe you've donated over $1 million. But, sir, my question is, you think she's terrific, yet she's polling significantly behind Donald Trump in South Carolina, her home state. She lost to him in New Hampshire and Iowa. Are you going to keep that money flowing if she doesn't start winning states, if she can't win South Carolina?
She's gone from 2% of the vote to now 43% of the vote, and it's all up from here. All you have to do is put those two side by side, and you know that you've got to have Nikki Haley as your president. She is extraordinary. She has great gravitas. She is a delightful person. She believes in freedom. She believes in democracy. And I can't imagine a self-respecting woman voting for Trump. And this is a really, really important election. I have not been active since I supported Obama many years ago with the presidential elections. Yeah. And this one really matters to all of us. Our democracy is at stake. Our freedom is at stake. And we have a great candidate. And clearly, she's cleared the field.
We're almost out of time, but just quickly, yes or no, as long as Nikki Haley stays in this campaign, you will continue your financial contributions to her?
Oh, absolutely. She's fantastic.
Okay.
I mean, what do you mean? I think it's the guys who are supporting Trump who should start questioning themselves. I think this is the time. Nikki, we've got an opportunity for a great president, and we got to support her.
All right, Tim, we got to leave it there. But thank you so much for joining us on all things politics and crypto today. Tim Draper, founder of Draper Associates. Now, still coming up on Bloomberg Crypto, we'll talk to Andy Bromberg, the CEO of the crypto payments company Beam. He says the new Bitcoin ETFs are a milestone, but has a warning for the industry.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
First thing I usually go for, let's take a look at fees. You know, what are my clients going to pay in order to hold any product? That's number one. And then we want to see the actual reputation of the shop itself. And you got some big boys in here, right? You got BlackRock, Fidelity. You got some players who've been around in the crypto space a while. Give Bitwise a lot of credit here. But it's a very long list. I mean, asking advisors to do their due diligence down 11 at the beginning is quite a task.
And that was some of my conversation with Douglas Bonaparte on ETF IQ yesterday. And you heard from the man himself. Of course, we have a lot of big boys in this race with some very low fees. And that fee war is continuing. Of course, the news dropping yesterday that the Invesco Galaxy Bitcoin ETF, you can see the ticker there, BTCO, it's dropping its fee once again. Of course, fees are completely waived for the first 6 months or until $5 billion in assets. But the eventual fee is being lowered. Of course, they started with 39 basis points. They're dropping that down to 25 basis points. That puts it more into territory with BlackRock and Fidelity. The low water mark in this race is 19 basis points, so just shy of that. And Kelly, it's amazing. You look at the bulk of these products, it seems like most of them are below that 30 basis point threshold. And then on the extreme other end, of course, you have the Grayscale Bitcoin Trust at 1.5%. Yeah. One of these things, not like the other.
Yeah, that's exactly right. And Katie, of course, on this show, on ETF IQ and others, a lot of people have been really excited about these spot Bitcoin exchange traded funds, but someone is a little bit more skeptical about what this could mean for the industry as it moves forward. Andy Bromberg is joining us now. He is the CEO of Beam. And Andy, you essentially say that if crypto adoption primarily happens through exchange traded funds or other centralized products, that essentially your argument is it's going to run counter to the whole thesis behind this technology, which is decentralization. But can this technology really reach its full potential if it isn't legitimized and validated in this way?
No, Kaylee, I think you're exactly right. It is important, and this is a big milestone for the industry. But for me, the thing to remember is that the Bitcoin ETFs are not actually true crypto. They are a financialization of the industry, and that's important for validation, important for people to come in. But it's not the same thing. It's a little bit like saying gold ETFs are here, so we no longer need gold jewelry or other use cases for gold. That's not true. They're two separate things. There's the financialization of the asset, and there's the assets themselves and what they can do. And I think the Bitcoin ETFs coming is great, especially the industry native ones like Bitwise and 21 Shares. I think those are awesome. But we have to keep building in the industry to use the technology in ways that are actually productive. So products like My Wallet Beam, that's a cross-border payments product, all of these things are really useful and can use the technology to provide real benefit to people. In the same way that jewelry is a useful product that people actually want to use, separate from the speculation and investment in it for just exposure to the price itself. And I think if the industry forgets that there are actual products to build and real consumers to serve and needs to fulfill, then we will have wasted all this technology just on a purely financial asset. And I think that's not the point.
Well, Andy, could you see a situation where there's almost a divide in the investor base of Bitcoin? Sure, you have sort of the retail, non-crypto native folk just investing in these ETFs, maybe viewing it similar to digital gold and putting it in that bucket of their portfolio. And then you have this other world that exists that is actually building and doing things with that technology that, like you mentioned, has been being developed for the past decade plus.
No, I think that's exactly right. My hope is that the ETFs will bring a ton of attention, a ton of new people, and the industry itself that's building the products for people can then use that as a funnel to get those people interested and make them then question, well, I invested in this because I'm interested in speculating on it, but what's actually behind this? What's the technology? Why is it useful? And I'm hoping that the industry building products based on this technology can then treat the ETFs as sort of a top of funnel lead generation, get these people interested in these actual products, and then drive adoption of the end products. And that's my hope. So I hope the Bitcoin ETFs can accomplish that. But my fear is that if the Bitcoin ETFs become the dominant and only way that people get exposure to this space, then all of a sudden we won't have people using these products anymore. And that's really scary to me, especially because if you go all the way back to the original genesis of Bitcoin, in the very first block of Bitcoin, Satoshi, the pseudonymous creator of Bitcoin, put this phrase, chancellor on the brink of the second bailout of the banks. And what Satoshi was saying was, this technology can help save us from the challenges that come with these centralized financial institutions, that we're bailing out these banks that are failing. Bitcoin could solve this by creating this new and independent thing. And that, to me, is the core promise of the technology. And I just really hope the industry does not forget this and let itself be totally dominated by large financial institutions instead of actual people and actual products that provide real benefit.
I'm curious to get your thoughts on what this could mean, the advent of these Bitcoin ETFs, if they really grow in size, what that means for the trading of Bitcoin. Because actually on this show last week, we spoke to Anthony Pompliano, who made the point that it'll probably mean that Bitcoin trading becomes less fun. There will be less volatility, et cetera. You're not going to see these crazy returns, not these crazy drawdowns either. What are your thoughts on that?
I think Anthony's right on that, and I think that's a good thing. I think that's part of the maturation of the industry. This industry has gone in cycles, boom and bust cycles, for better or for worse, since it started. And the hope, I think, is that over time, those cycles may continue. Many industries, every industry is cyclical at some level, but that they get dampened a little bit. And we don't see quite the crazy ups and downs that we've seen over the past decade and a half in Bitcoin. And institutional inflows and more capital coming into the space, increased liquidity, can help to prevent that. So I think that's a good thing. I think it's good if trading becomes a little bit more boring, because that allows, again, the focus to be on these products that provide people real benefits instead of on pure play speculation on this asset. I think Bitcoin as a digital gold is a really promising future. I don't know that it's quite achieved that yet, but I hope that it will in the future. And in order for that to really be true, I think we have to see the volatility calm down a little bit, and I expect the ETFs will help with that.
All right, Andy, thank you so much for joining us. That was Andy Bromberg, the CEO of Beam. Still coming up here on Bloomberg Crypto, FTX is hoarding cash as bankruptcy advisors look for a way to repay customers. We'll have the details next. This is Bloomberg. Welcome back to Bloomberg Crypto. FTX is unloading crypto assets and hoarding cash as bankruptcy advisors look for a way to repay customers whose accounts have been frozen since the platform collapsed in 2022. Bloomberg's Jonathan Randles reported on this and is joining us now. So, Jonathan, It did collapse in November of 2022. Here we are in January of 2024. Why make this move now?
The main reason is because they're getting closer to figuring out and finalizing their plan for repaying the millions of customers whose accounts have been frozen on the exchange since it collapsed. So basically, this is just the timing of their plans are coming together to repay everybody who's had all their accounts stuck for all this time.
So this has meant, of course, that FTX's cash position has gone higher. What has this meant for the actual customer accounts?
It's been good for the accounts. It's coincided with a really kind of dramatic increase in the value of FTX customer accounts. They were trading on the secondary market around 38 cents on the dollar back in October, but are now trading at like 73 cents on the dollar. That's according to this firm, Cherokee Acquisition, that kind of compiles these data and brokers bankruptcy claims. So it's been positive for customers.
And of course, this is just one part of this much larger bankruptcy process. Jonathan, what comes next in this process?
Yeah, there's actually going to be a pretty important hearing tomorrow in Delaware where we're expecting FTX's advisors and the new CEO, John Ray, to give an update with regard to kind of their timing for finalizing their customer repayment plan and giving a little bit more insight on when those payments might be made.
And we don't have much time left with you, but of course, up for dispute is how the judge plans to resolve that dispute over basically how they're valuing the crypto holdings of those customers. What's going on there?
Yeah, there's dozens of customers are complaining and opposed to this plan to be repaid totally in cash. A lot of customers would prefer that their crypto is given back to them in crypto so that they can enjoy kind of the upside and the positive swing in, let's say, Bitcoin that's occurred over the last year. But every indication is that the customers will be repaid in cash. So part of the hearing tomorrow will be possibly a determination that could go a long way to figuring that out.
All right, it'll be fascinating to see what happens there. Bloomberg's Jonathan Randall, thank you so much. Of course, that does it for Bloomberg Crypto. We're going to be back with you next Tuesday at 12 p.m. Wall Street time. This is Bloomberg.